Good morning, everyone. Happy Thursday. We are Nadlan broadcasting to you from the East Coast of New York, giving you daily updates from real estate entrepreneurs so you can become one yourself. And today we've got post number 4 from Entrepreneur of the Week, Natalie Alter. So, who are we? Nadlan is providing real estate courses, mentoring, financing, deal analysis, and great deal offerings. If you like our content, please give us a thumbs up, register to our channel, and hit the notification button so you can get an alert when we publish new content. It will make sure you get notified about every new video we post and will also help others find our content. And you're also welcome to find us on Facebook, social networks, and on our website, www.forumrealestateusa.com. So let's get to it. All right, everyone. So today we got post number 4 of Natalie Alter. She's educating us through the week. And first, let's go and see some news that we got. Hi, friends. Look for a good inspection in Orlando. So everyone looking for inspectors or such, you're welcome to post on our Facebook channel or on the website. The median price of a home in Southern California reached $619,750, an increase of nearly $80,000. All right, so I believe this is happening all over the US. The market is crazy now. You see properties are being sold at or above asking price, bidding wars, an increase of 14.8% from February 2020. This is insane. All right, so we got an update from Gilad Shapira, a new video, Why People Do Not Start Investing in Real Estate, Part 2. There's money, but there's no knowledge. All right, so you're welcome to watch the video and gain the knowledge. This is what we're here for. Hello, everyone. I would love to receive an estimate of closing costs. Brokerage plus taxes plus attorney for a home in the US, especially in Alabama. All right, so this is another thing that you can get from our channel. You can see that people replied 8 to 9%, 5 to 10K. All issues in percentage and everything is negotiable, so I believe it will be difficult to give an exact numbers. Talk to Orit. She mediates in Alabama. All right, and we got a post from Tal Levy, one of our mentors. It's not over if the lady sings. So he gave us a video with a story. One story with 2 morals dedicated to Sivan Segman Schwartz. So you're welcome to join us and watch the story, hear it. I listened to it, very exciting, and it shows a lot of dedication and persistence of going after a client that eventually the deal can turn into your favor because of that. So you're welcome to watch it on our Facebook channel. All right, so let's jump into our today's post after this short break. All right, guys, welcome back to our channel, and let's get through post number 4. All right, so family company or limited liability company. By working properly with the right professionals, we can enjoy the benefits of sole taxation in real estate profits. In this post, we will talk about a family company, a limited company, where it meets us, and most importantly, how you can save a lot of money. So without further ado, let's get started. Company Ltd, Limited Liability Company. An Ltd company may engage in any legal matter that it declares as arisen for this purpose, and it has a separation between the people who establish it and are its owners and its assets and accounts. A company can be private or public, listed on a stock exchange or a family company, but it is considered an economic legal entity in itself that obeys laws regarding the management of its funds and assets and payments and liabilities to suppliers and customers. In short, the company is legally independent and its owners enjoy a limitation of liability. It is not possible to tie the company's debt to the company's owner. So guys, this is great. Whenever you purchase a property and you place it not under your own name but under the LLC. Let's say the bank, you didn't pay the payments, or the bank need to liquidate that property. They are not going to touch your private assets. So this is a very good point. Family company, home company. A family company is like a limited company. It operates according to the company's law, but the only difference between it and the regular limited company is in calculating the taxes paid to the income tax. In terms of income tax, a family company is taxed as if it were an individual and not a limited company. Therefore, the tax calculations are calculated according to the single taxation of the taxpayer representing the company. On the face of it, it seems better to pay corporation tax of 25% over individual tax that can reach 48% of income. But a family company has a number of advantages, and proper conduct will allow the company to enjoy the unique benefits and also take advantage of the protection afforded by a limited company. There are conditions that must be met in order to register as a family company. The main ones being: 1. A company controlled by a maximum of 5 people. All right, so guys, you cannot have more than 5 people in such a company. Number 2, a society in which the public has no real interest. Number 3, the company is required to hold one of the following assets: building, land, cash, shares of a home company. What are the benefits of a family company? While the distribution of dividends to shareholders in a regular limited company entails the payment of tax, the great advantage of a family company is that dividend distributions to the shareholders in the family company are exempt from tax payments. If the representative taxpayer has several companies, some of which gain and some lose, it is possible to offset losses of one company from the profits of the other company. This method is common among contractors who set up a separate company for each construction project. If the representative taxpayer has tax reliefs such as credit points due to a family with many children or due to disability and more, the whole family will be able to enjoy these credits, points, and the tax relief they provide. If the representative taxpayer is an employee who owns a losing company, it is possible to offset the company's losses against the income from the salary and receive tax refunds. So guys, you can see there's a lot of benefits that comes with it. A family company is one of the pipe companies. A company defined as a family company gives its shareholders a unique status. The company's income will be attributed to each of the shareholders directly and will be taxed according to the marginal tax rate imposed on it. Allegedly, in most cases, the individual will prefer that the tax levied on the company's income be according to the corporation tax, which is significantly lower than the maximum marginal tax imposed on individuals. However, basic tax planning, but one that is controversial, would say that when a company makes a profit, the shareholder will leave the company in its normal position. From the moment that there are losses, they will become a family company, deducting the loss from their personal income. It should be emphasized that no more for the taxpayer is for the owner of the family company to offset losses at the personal level during the period in which the company was normal. The company will be able to offset the losses only against future profits. All right, guys, so how can a family or a home company help us save tax? Natalie, bring you back to one of the previous posts of the week. Okay, so you're more than welcome to jump into the previous post of the week, which explained that income tax allows a company to be viewed and only for the purpose of offsetting the tax. As a result of this determination, we are not entitled to a 15% reduced tax benefit on rental income from LLC. Please note, if we apply in a letter to the tax authorities to turn the LLC into a home or family company within 90 days of the establishment of the LLC, we will be entitled to a 15% reduced tax. Wow, so many tips from Natalie. I'm sure that all of you are learning a lot of it. We are not done yet, but you can come to this post and ask questions. Natalie also have an expert channel on our website to ask questions, so you're more than welcome to do so. So let's continue. An LLC can be considered a home company provided it is a transparent corporation, even in the country in which it resides. Each of its shareholders who is a resident of Israel will attach the company's report to their report, and there will be no need to open an income tax file for the company in Israel. So what's the catch? So what's the bottom line? A regional labor court has ruled that the income of a family company is subject to Social Security contributions, even in cases where the income would have been exempt if it had been received by a single person. The decision is expected to be appealed to the National Court. Pursuant to Section 373A of the National Insurance Law, a liability has arisen in Social Security contributions for all the right holders in a home company or in a family company, whether the income was distributed in the same tax year or not. On the other hand, Section 350 of the law applies specific exemptions inter alia to the individual's income from dividends, interest, and even from rental income from property outside Israel, which is 15%. If so, the question arises, do income, profits that are not considered income for the purpose of paying Social Security contributions by an individual suddenly become debtors in Social Security contribution if they originate in a family company or a home company in which the individual is a shareholder or a member? The policy of the National Insurance Institute has changed over the years in relation to this question. The exemption will not apply to the sole income of rights holders in a family company or a domestic company according to the provisions of Section 373A. As you probably understand, there are still legal quibbles, and the last word on the issue has not yet been said. The court is expected to hear the matter again following an appeal filed with the National Labor Court. In conclusion, with professional and correct work, the LLC can be considered as a family company and receive an individual taxation rate of 15%. However, one should pay attention to Social Security contributions and know how to properly manage the taxation of the property. reminds that it is always important to do this process with qualified professionals in order to avoid mistakes and profit from the property as much as possible. All right, guys, so we have a nice picture here. And I guess that if you got lost a bit in this post, you know who to contact, Natalie Alter. You can contact directly, or you can also leave a question right here in the post or in our Facebook group. You can always click the link below the post and get to the Facebook group, to that post. All right, so this is the Hebrew version. We also have English version. So guys, you're more than welcome to enjoy all of these benefits of our community. And we will see you tomorrow in post number 5 from Natalie Alter. See you tomorrow.